Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, November 2nd, 2011 is sponsored by Realtik. Alright, let's get right into the mix today. Markets are slightly higher across the board. We had a big rally early in the day as there was optimism the Federal Reserve would come out with their policy statement at 12:30 p.m. Eastern Time and give us some sort of sign that QE3 was on the way. That did not happen. And you can see here the initial gap up, the initial surge up leading into that 12:30 time frame. As we get closer and closer, the market starts to see some profit taking, and then right here at 12:30 p.m. Eastern Time is where the statement comes out, and you can see the market sell off. We come right down to this 50 moving average right here at the pivot low at the pink trend line, and right there we're now going in a sideways motion. So again, it's been a little bit of a wild ride today, and again, it's all about the markets, all about what exactly is going on here. The Fed is now speaking in terms of Ben Bernanke giving his live statements here at the press conference. That's the next step that Wall Street is going to focus on. So again, all eyes are now turning to the Federal Reserve. As I do this video, Ben Bernanke is speaking, and you can watch literally whether or not the markets pop on his statements or come down. But so far, based on the original FOMC policy statement at 12:30, he did not give any indication of QE3 in the near term. All right, now again, he's doing his press conference, which just starts here at 2:15 p.m., and we'll watch for any further indicators of this. All right. Now, he did talk about a strengthening economy, although he did say that housing is depressed and the job market continues to not be in good shape. Now, let's just talk about some different things going on here. Obviously, the gap up today took us above yesterday's pivot highs. We had that two-day ugly sell-off, right? Here's the sell-off for the last 2 days that just rocked the markets 5 to 6% on the downside. Now, the whole idea here is it's all about this new referendum vote in Greece. Now, this vote, if it does go through, could literally stop the whole bailout process that began and caused the 20% rally in the markets over the last month. And again, there's talk that Greece won't get their next aid package of money to pay off their bills, and there might be a hard default. So that's really keeping the markets on edge right now. But again, there's all this hope that Bernanke will come to save the day, just like he did over the past few years by printing trillions and trillions of dollars and doing his POMO and all the other forms of kind of additional quantitative easing they've done over the last few years. All right? So that's what you see right here. Right now, Bernanke again speaking live. Market is upticking just a little bit here. As you can see, it's upticking just a tiny bit. And we'll see again if the market continues to see some sort of rally on his statement, or do they sell it after he's complete. Let's take a look at a couple other things. Obviously, the big watcher here would be the dollar. Notice how the dollar, for the most part, opened lower. What did the markets do? The markets opened higher. Remember, inverse to the dollar. That's the way the markets trade. If the dollar's going down, markets will go up. If the dollar's going up, markets will go down. Here you had a gap down in the markets, therefore that implies the markets should have gapped down. All right, the dollar gapped down, therefore that implies the market should be gapping up. That's exactly what happened today. Then the dollar slowly went higher. Markets have sold off from the highs. Now recently, the dollar has pulled back, and we've seen the markets come off their lows. All right, so it's that inverse relationship. Just know that you're essentially trading, if you trade the S&P or you trade the Dow or the NASDAQ, essentially you're trading a currency that is opposite the dollar. All right, let's take a look at a couple other stocks today. There are some stocks that are in motion. We're seeing financials and commodity stocks doing well today. ExxonMobil, for instance, is having a pretty solid day here, trading up about 99 cents. Chevron, as well, is having a good day, up $1.80. So both stocks having a nice move. In the other side of the court, we have the stocks that are not performing that well, which are technology. If you take a look at Apple Computer, even with the markets up today across the board still, the Apple stock is trading down 40 cents. Again, right now, Dow Jones Industrial Average is up 129 points. NASDAQ is only up 15 points. S&P is up about 13. So Dow and S&P up 1%. NASDAQ is only up 0.5%. And that's, again, showing us how Apple is weaker here. Other stocks that are weak would also be Research in Motion, Intel, Microsoft, all negative. All right, now we had good earnings from MasterCard today. MasterCard having monstrous earnings. Look at this perfect little double top right up here. And if I draw that trend line right across, you can clearly see you pierce that double top, making a new all-time high on MasterCard. But since then, we've reversed pretty nicely, and that has come back in. All right, so that's interesting to watch as well. That's giving a rise to Visa, American Express. Anything credit card related is getting a nice little juice by today. All right, I'm just continuing to watch Bernanke's statements coming out. Inflation has moderated as commodity prices have declined, so he's talking down inflation, which also gives rise to the thought process you might get a little more QE3. Fed is prepared to employ new measures to make sure things go smoothly here, and we continue to see some growth. And we're going back to the SPY here on up a $1.15, $1.16. You can see again, you've gotten a little bounce off the lows, but you're not seeing any sort of major move. There isn't the direct Ben Bernanke statement of I will employ QE3, and that's going to keep this market in kind of a haze for now. Now, later today, there are some key things we must recognize. Well, first off, this morning we got the ADP private sector jobs employment numbers, 110,000. That was a pretty decent number, but again, you were waiting on the Fed today, and then obviously we were waiting on later today. There's a Greek meeting with France and Germany that is going to discuss. It's kind of an emergency meeting to discuss this whole new referendum deal where Papandreou is now, who's again the leader of Greece, is going into see if the people want to vote on this and how that's going to play out. And again, will that create a hard default in Greece, which could really topple the markets in Europe? And that's the big fear here, folks. It's all about, an orderly default or a hard default. And this referendum possibility now puts it out that who's going to really lend money to Greece, even in this bailout package goes forward. Who wants to lend if a new government's going to come right back in and possibly ignore any of the pre-existing rules that were made for the bailout package? And I think that's the big question. I mean, you have a lot of, obviously the population of Greece is very anti the bailout because they don't want to deal with the cuts that are going on there. And I think that's, it's just a major mess right now. To see this market go up 20% recently and then see this pullback, you just have to understand it's the nature of the beast. And that's why, again, I've been beautifully profiting on this last pullback, just like the members here at InTheMoneyStocks.com. So I encourage you to join the Research Center, take the 7-day free trial, get on board, get the swing trade alerts we put out live in the Research Center, watch the videos where we unveil proprietary techniques. All that stuff is for yours. You can take it, use it, make money off of it inside the Research Center, and there's a 7-day free trial. All right, and again, just to give you guys some sense of what we've been playing here recently, yesterday and the last couple days into late last week, we nailed the fall on the FXE, which is the Euro short. That was a beautiful fall right there. The SDS, we nailed the jump here. We're right along here for the profitable move up there. I still have half my position of the SDS as well after taking the first half off for about 10% profit in a matter of just a couple trading days. And some other ones as well. JJC, this nice little fall right here, we were short for that and gave that out on the hot charts and alerts. So again, the trades are there. I don't really care if the markets go up or down. It's all about being on the right side of the trade. And as long as I can read the charts, in which we can use our proprietary techniques to read the charts, then we'll be on the right side of the trade 9 out of 10 times. And that's the beauty of what we do. You want to be better than the institutions. You want to be better than your next door neighbor. You want to be better than the CEOs out there. That's when you come to us and start profiting with the pros. All right, guys, enough said. Just continuing to watch this Bernanke comment come through and see exactly what he's saying. Spiders, again, we are seeing a little bit of an uptick here, but nothing major yet. If you do get above the red line here in the 20 and close up there on the 10-minute chart of the SPY here, that's when I think you have a chance to go back to the highs of the day. As long as you stay here, you could make a case this is an in spirit of bear flag. And again, for those of us that know the in spirit of patterns, there's a down move, sideways consolidation. As long as you stay below the red line and the 20, that could be a possibility for downside. So watch it very, very closely. If market collapses, where is it going to go? It's going to go right down here to gap fill. All right? So again, I'll be in the intraday stock chat the rest of the day. We invite you to come take the 7-day free trial of the intraday stock chat as well. Join me in there and start learning how to read the markets on every time frame out there, whether you're a swing trader, investor, or day trader. It's there for the taking. All right, guys, take care. I'm going to go back and profit the rest of the day. Hope to see you there, and I'll talk to you soon.